Welcome to another episode of Biz Money Talks with Tracey Bissett. I am very excited. We have a special guest today, Daryl Ching, founder of Vistance Capital Advisory and a well-recognized expert in structured finance. And so Daryl has over 10 years of experience in investment banking, primarily at RBC Capital Markets. And while he was there, he executed billions of dollars of debt and equity financing transactions. He spent another decade working in a financial executive capacity, operating small businesses and raising over $50 million in capital. And certainly as a CFO, so Chief Financial Officer for a number of small businesses in various industries, he has helped companies generate financial statements, key performance indicators, provided strategic advice on business strategy, and advised on mergers and acquisitions. So definitely someone with a wealth of experience, and it's wonderful that we have him here today. So welcome, Daryl.
Thank you, Tracey.
So I've described really your formal bio, and I'd love to hear from you what a day in your life looks like and what you're typically up to.
For sure. My time is split between business development and servicing clients. So obviously running a small business, I am responsible for bringing in clients. I'm primarily responsible in the company. I don't have a salespeople. So the day in the life of Daryl probably involves at least 2-3 hours of prospective client calls, of reaching out to new clients, prospective clients that are either looking to raise capital, maybe in the Series A equity financing round, or they are looking for CFO services. And in particular, I find that we don't get clients that come to us that say, I just want to improve my accounting. They come to us because they are at a critical juncture, whether it's we're thinking about doing a big pivot in terms of business strategy, or we're thinking about raising some capital, or they've hit a roadblock where they have now suffered an HST audit and they need help with something different. So usually there is a trigger or event that causes this. So I would say about 30-40% of my day is on business development, and the rest of my time would be either working with my team and coaching my team on providing the accounting services that we offer, or being on the phone or video with clients and helping them out with strategy.
Excellent. Well, it sounds really fun, and you must have a lot of interesting experiences throughout the day because you're hopping from so many different things and getting to work with so many different businesses. So that sounds really fun to me, which is great. And just to set the stage for why we're here today, you and I both agree that it's so important for business owners to understand their financial position, to really proactively manage it, and to be planning for the future. And we view that to be keys to success. And so we're going to talk today about what business owners need to know about navigating this side of their business and about raising capital because of your extensive experience. And so those who are either starting up, kind of on their way, or you want to get a check if really you're in the right on the right track, it's great if you're watching us live or you're catching the replay because that's just setting that stage for that conversation that we're going to have. And so, Daryl, I'd love for you to start with what you think business owners need to know about the financial side of their business. And as you go through what you think they need to know, what is their role and what's their accountability? Because I've certainly, and I'm sure you have over the years, heard lots of different responses come back when I ask that question directly to business owners.
Yeah, I'll try to sum it up first with just a sentence or two.
Sure.
When they approach an investor and they're going for a capital raise, what investors really are looking for is the fact that you at least are positioned to transition from a small to medium-sized business and have thought about what that transition looks like. So now let me go back and clarify that. For a lot of entrepreneurs, they're used to working on their own independently, making a lot of decisions on the fly, using their gut. And it often works when you're in the startup phase because you need to be extremely nimble. But as you grow and you start to build your team and you start to generate more revenue, if you are the type of CEO that's making every business decision and is not setting up processes or hiring people that are empowered to make decisions, your business cannot grow. And so take that all the way to the capital raising perspective. A lot of entrepreneurs are fantastic at talking about their vision, their passion, the products that they've created, and what pain points they're addressing. But an investor is sitting there thinking, okay, what's the strength of the management team? Have you surrounded yourself with good key people? What's the strength of your financial position? Have you established your plan for capital, whether you're raising seed round of capital, whether you're raising Series A financing? Have you tapped debt financing? Do you have good relationships with banks to access bank facilities? And basically, it's looking 3 years ahead. Are you positioned to be successful in 3 years? Or are you the type of business that's going to spin their wheels and be stuck in neutral at 1 to 2 million of revenue and never be able to grow because you operate the same way you did with 2 staff as the same way you operate with 10 staff? And so how it relates to accounting, accounting is typically a function that's seen by a lot of small businesses as a must-have, where it's the last place they want to invest a dollar. They rather invest a dollar towards sales and marketing, something that generates revenue. Mm-hmm. But without investing in accounting, it's difficult to know their financial position when they make decisions. So when they make key decisions like expanding revenue or pivoting their business strategy, a lot of companies are operating blind and making these decisions without the benefit of looking at numbers. And this is what can kill them, is if they don't make prudent decisions with careful analysis. And this is the transition I think that a lot of companies struggle with, is they reach a certain size where they need to really start thinking about budget and understand their accounting in order to move forward and become very successful.
Interesting. So what I heard were a few themes come out of that. One being almost the mindset, like this longer term mindset, at least thinking 3 years out, and who are the people I need in my management team to make all of this become a reality, because that's what the investors are going to be looking towards. But then making sure that deliberate investment into the accounting side is there, so that you're building up almost the financial foundation and the infrastructure of the business as it's growing, so that you can continue to make those transitions with ease. And it's not all of a sudden we've got to do all this stuff. So if you can build that infrastructure and then grow it, I think that's important. When you think about CEOs, and if you had to say kind of their accountability and role for the overall business, but particularly the financial side, is it something they just delegate over to someone else, or should they be well-versed and really on point with it as well?
I think they need to be maybe not well-versed, but slightly educated on the accounting side. When I meet CEOs that say, yeah, my accountant handles that, I don't deal with that at all, it puzzles me a little bit, because as a CEO, don't you want to know what your margins are, what your revenues are, what your expenses are? Don't you want to know if you are optimizing your business in terms of maximizing the profitability, eliminating fixed expenses that don't need to be looked at? Because what ends up happening is CEOs really focus on the sales side of the P&L, where they're just focused on generating revenue, and all their effort is spent generating more revenue. But when you fail to look at the big picture, you start to miss things, and their gaps start to form. So is your staff efficiently set up so that they are as productive as possible based on your organizational structure? Do you have redundancies and costs with vendors, suppliers, and people in general? And I find that for a lot of entrepreneurs, they start generating a revenue source, they get bored, and they're like, I want a new revenue source, or I want to go enter a new jurisdiction. It's like, hold on, but you haven't really established an efficient operation yet. Until you optimize what you have, it doesn't necessarily make sense, because if your end goal is profit, and that's what it should be for most businesses, you can often generate more profit by looking carefully at the expense side of your P&L and making sure that you're set up optimally, than going and chasing a brand new revenue source and having to create a brand new marketing campaign to chase something else. So this is what I encourage CEOs. A lot of times it's slow down. Let's look at your core business, and let's make sure that this is operating with full efficiency before we start chasing shiny objects.
Yeah, I love that. And it's so true. And certainly for those who are doing anything online, like we've gotten to this place where there's a hype around the sales and everyone's super focused on sales, but are you making any money? And it's interesting you say that everyone should have that goal of profit. And I agree. But when you ask a lot of business owners, that's not really where their head is at necessarily. They're not thinking about that. So I think you mentioned a lot of really good points that people need to be focused on. And so you do need to know the numbers. You need to be able to execute strategy with those in mind, but certainly make use of and rely on professionals. such as someone like yourself. So one of the services that you provide is fractional chief financial officer or CFO services. What is that? And kind of what does a fractional CFO do? How do you help companies? What does that look like? As you're going through that, when's the time to bring somebody like that on board? And there may be a revenue trigger, or there might be some other kind of pivotal moment in the company where that's that point where it's appropriate.
So Tracey, it's funny that you asked that question, because I often get asked by my prospects, okay, so what is a CFO cost? And it's so difficult to answer that question because the needs of different businesses range so drastically.
Absolutely.
I've got engagements where people say, Daryl, I just want 3 hours of your time a week and just to be able to pick your brain. And we just have a 2-3 hour meeting, and it gives me the opportunity to just ask you questions in terms of strategy and what I should be doing with my business. Because for a lot of entrepreneurs, the CEOs have junior staff. They have not hired people that are senior that they can consult and bounce ideas off of. So just to have somebody with business acumen who has worked in many different businesses be able to provide high level advice, I think is useful to them. But it ranges from strategic advice to a trigger event like, hey, we're thinking about acquiring another business. Can you consult us on this? How should we be thinking about this strategically? To, okay, we're at a crossroads here. We've got a B2B business that's running quite well, but we want to capture the B2C market, which means creating a brand, which means a large capital investment. How do we think about this? I have tax problems and I need help and with dealing with CRA. So the range of different asks that we get are quite wide. And a lot of times, hiring a junior accountant or bookkeeper does not solve that problem.
No, not at all.
And if you hire an outside accounting firm, you get mixed results. It depends on who you hire, who you get. But I think the problem that we see in the accounting world a lot of times is that people that have pure accounting training and have come out and maybe only worked in public accounting don't understand all the nuances that a small business goes through and are not in a great position to help. So the vantage point that I have coming from investment banking and from working as an executive and CFO in small businesses, I've had to deal with day-to-day problems. I've had to put out fires. So I understand those challenges, and it just adds an element of business acumen and practicality that I can apply to accounting versus somebody who's just trained and understands the tax rules, as an example. But yeah, the CFO gambit has a pretty wide range depending on what people need. And in fact, we even have clients that just want bookkeeping as an example, and they're fine. They've already got the advisory part set up. So we tailor based on the needs of the business.
Okay. And you mentioned a few different possible trigger points that people could bring you in. And so is there generally a revenue level, or it's more geared towards that one of those kind of trigger events?
I would say the average is anywhere between 2 to 10 million of revenue. And the reason for that is when you get to about the 2 million revenue stage, a lot of those companies are thinking about their Series A equity financing. And the reason why that nuance is important is because for a lot of those businesses, they had previously raised seed capital through friends and family that did not demand the massive business plan, the financial model. It was more a lot based on trust of the entrepreneur and a great idea was how they were able to get their investment.
I'm glad that you elaborated on that, because I'm sure some people who are listening were wondering what's that difference between the seed and the Series A.
Right. Yeah. So I'm glad I'm clarifying that. With Series A equity financing, they're probably approaching a pretty sophisticated institutional investor for at least a couple $1 million. When you're looking for that kind of money, the expectations on your materials, on your plan, on your business plan, on your budget grow exponentially. And a lot of those companies haven't created materials like that before. And quite frankly, haven't thought that far ahead. Whereas a lot of entrepreneurs are only thinking about next month, 2 months from now. And you're creating a business plan for 3 to 5 years. Because a natural question from an investor is, well, what's my exit strategy? Because I want to exit this investment in 3 to 5 years. Do you have a plan to sell the business, to IPO? And what are you going to do? What pieces are you going to put together to make that happen? And so that's the big reason why that they're in that stage of Series A equity financing requiring our help because now they're dealing with institutions is a big trigger point for us. I would say that north of 10 million, you're starting to get into businesses that probably are in a position to hire a full-time CFO.
Mm-hmm.
And so we kind of bridge that gap until they're able to go and hire that full-time CFO, because that hire is generally unaffordable for most small businesses.
Absolutely. Oh, I think that was a great description in a way that you phrased it. And so you've also explained how do you help them, because you're helping them prepare all those materials and really focus the efforts and producing it at a level that is expected by the potential investors, so that it's quality, it's credible, and it speaks to all of the stuff that the investors are looking for. Are there other things that business owners should be aware of as they're raising capital? Anything you've kind of seen, either just from your experience or you've worked with clients where things have surfaced that maybe people haven't thought of in advance that you'd like to share with those who are watching or listening?
Sure, I'll name a few things. There's some unfortunate incidents where I was raising capital and I started to look at their financial statements,
Mm-hmm.
and I saw glaring errors, especially on the balance sheet. And I think a lot of business owners understand their P&L, but they don't really understand their balance sheet. And when we start going through the balance sheet and looking at items, we start realizing that there are things that are incredibly wrong. There are nuances that a bookkeeper will not catch when it comes to year-end adjusting entries, intercompany transactions, FX, anything that gets a bit complex, shareholder loans,
Mm-hmm.
they're not captured properly. And we've actually had to go back and do 2-3 years of accounting cleanup just so that they can get their investment, because they would not pass due diligence. So having your financials up to date and accurate before you start the capital raising process is critical. The other thing I'll mention about the capital raising process is that it's more of an art than a science at that stage in Series A, when you're only at 2 million revenue and you're not profitable yet and you're in growth mode. So a lot of people think there's a magic formula where it's like, well, yeah, run me a discounted cash flow model and I'm done. Or, like, let's just take a multiple of revenue, 3 times revenue, done. And it's like, no, it's not that simple. The way that the investors look at a company at this early stage is that they've got their own list of checkboxes and criteria. So they'll look at things like management team, size of the market, barriers to entry, regulatory environment, exit strategy, what the plan is in terms of the quality of the financial assumptions and the financial projections. And they will mark a score on all of those things. And let's just say they give a score out of 10. And so if you rank very high and you check all those boxes and you're strong in every one of those categories and you've given great information, that is your best chance of securing a high valuation. And a lot of times, looking more prepared may actually be more important than actually running a good business. And I hate to say it, but that's the truth, right? In the capital raising world, investors see what they see.
Yeah.
And just being super prepared and having things well thought out is probably the best way to garner the highest valuation. And the less of those boxes that you check. So for example, if the management team is just the CEO and it's just a headshot of the CEO, that's a weakness, right? Mm-hmm. And some people think it's a strength. And it's like, well, I know everything that goes on in my business. I work 24/7, but that's not a recipe for growth. So if you can check as many of those boxes as possible, that's how you garner the highest valuation. And the less that you check, lower your valuation. So typically in the angel and venture world, you're within a band in Series A financing, and they've got a band for every industry. And they'll say, okay, are you the low end of the band? Or are you on the high end of the band? Is really the way that they think about it.
Well, that's good to know, because certainly if you're starting your company and that's your plan to get there, you want to build it as you're going to be able to tick all of those boxes. And if you're thinking that that's in your future, you want to start preparing for all of those things now and getting everything in order. And as you mentioned before, even if you have to go back and correct errors in the financial statements, that's not like a one-day thing. That's going to take a little bit of time. So bringing in the right help to help sort through what do we even need to do is important well in advance of when you want to go and make this raise, I would imagine.
That's correct. I would agree with all of that, Tracey.
Excellent. I think that gives people a really great kind of snapshot of what they need to be focused on. In your experience, is there any resources out there that people could go and find kind of a check sheet like this, or anything that they could go off of as a guide in terms of resources that are publicly available?
On our website, my marketing people call it a call to action. We have a call to action on our website where you can actually request an investor checklist.
Oh,
And
cool.
so we do provide that. If people enter their email and put in their contact information, we do send that. And we have an investor checklist that provides the key documents when they're going for a capital raise. So generally, it could be a 2-page corporate summary, an investor presentation, a business plan, and a financial model. And we list out all the key components that need to be checked off in for each of those documents as a guide for our clients.
Excellent. And we'll make sure after we're done our live, I'll put the link to your website in on LinkedIn and Facebook. And then we'll make sure that that's in YouTube as well. So people can go right to your website and grab that, because that sounds like an excellent checklist for anybody who's just thinking about it, so they can get their heads wrapped around what would that look like. And then that's going to kind of require a project plan to get kind of all those gaps met over a certain period of time to make you eligible and get the best valuation that you can, because that's the goal. Not just to check the boxes, but to build up the strength of the company and then get the best valuation, which is great. Based on what you were just saying, we got some love there. We got a heart emoji there popping up. People really appreciated hearing about all of those things that they need to do, which is fantastic. Now, before I let you go, are there any final tips for business owners that you want to share? And it might be something new, or it might be something that you've already mentioned that you want to make sure that you reinforce so that they're really getting that message before we wrap up today.
The best advice that I can give a business owner is that your company is only as strong as your people. And I know this is not finance advice and it turns into HR, but to me, the people that you hire are actually probably the most important decision you make in your business. And there's a tendency for a lot of business startups to say, well, I want to go on the cheap, so I'll get contract workers and I'll get very junior people at minimum wage. And what you're going to find is that you end up spending a lot more time making decisions for them, double checking their work, and sometimes having to redo it. And really, the key skill that I value is critical thinking. And you've got to pay for critical thinking.
Yes.
And sometimes hiring that one individual for a much higher salary, coming in at $70,000, $80,000 versus a $40,000 salary, can really make the difference that makes or breaks your business, because you now have somebody that you can sleep at night. You trust them. They can make their own decisions. They can run with a project. You're not looking over their shoulder 24/7. And this is the way for your business to grow, is to start bringing in manager level people that you trust to make key decisions. Because when you can make every business decision when you're generating $500,000 of revenue, but when you're generating $10 million of revenue, you need a machine that works. And the best advice I can give is invest in your people. Hire the best people, put them through education programs, and make sure they're always constantly growing and learning. And every hire should be a future manager, future executive. And that's the way I think about people when I do my hiring, because I want my business to be able to run without me at some point.
Yeah, the goal being a self-led business. And if everyone is responsible for their area and doing what they need to do, then it should run smoothly. I think that's great. And I know that I often hear concerns from business owners that they're apprehensive about doing that because they're worried about, are they going to make enough money to carry that expense? And so then it does all come back to what you said at the beginning about, you need to know your numbers, you need to be on top of them, you need to know your margins. And so if you're comfortable with your numbers, then you can actually plan and hire those people accordingly, because you know you're going to make the money that you need to.
Well, if I can add to that, Tracey, sometimes what you can't see from a balance sheet or income statement is the peace of mind that you get from bringing in somebody a bit more expensive, and also the opportunity cost of, I don't have to look over their shoulder anymore, so I have more time to do these other activities that could generate more revenue and more sales, right? And that's the piece that I think that's missing, that's hard to gauge on a spreadsheet, but they are real intangibles that really make a difference in the business. And sometimes there is a requirement as an entrepreneur to put in your own capital to bootstrap. And I made that decision that even if without having enough revenue, I've taken the risk of bringing somebody on at a higher salary and taking losses maybe for the first couple months, but have always found that decision to be worthwhile in the end.
Excellent. I think that's great advice and something that everybody listening should really pay attention to and think about how you can incorporate into your strategy. And so before I let you go, what are you and your team working on now? And where can people go to learn more about your capital advisory, bookkeeping, and fractional CFO services?
So I'm actually pretty excited to tell you about a new venture that we are test marketing. Obviously, we've got our capital raising business, which is really my bread and butter and what started my consulting practice. And we've really expanded our CFO services. So we are doing a lot of accounting, monthly accounting, tax filings, the basic services. But really what my team does that's different is we provide the advisory. We interpret the financial results. Every month we say, well, here's the conclusions that we draw from your financial statements, and here's how your business can improve. And I think that's the difference maker for us versus other accounting firms. But a lot of entrepreneurs have told me, Daryl, I'm frustrated with my accountant, whether it's internal or even external. They don't get my business. They come up with these numbers that don't make sense to me, or they can't tell me how to improve. So we are test piloting a course for accountants to sort of take that next step to think like a CFO. Beyond the technical expertise of introducing those soft skills so that you can add more value to an entrepreneur in a business, to develop that business acumen, to develop the interpretation, analysis, and conclusions, those skills that really aren't taught in school. We're thinking about launching a course, applying our own expertise and experience to help accountants kind of hit that next level. And because for a lot of accountants, they get stuck at a junior accounting level and they don't know how to make manager, how to hit controller, how to make CFO. And they think taking more accounting courses is a solution, but it's not. It's really the soft skills. It's really the communication skills. And that's a course that we want to test pilot and see if there's any interest from other entrepreneurs and other accountants.
Excellent. And for people who want to learn more about your services, how do they find you?
You can go to www.vistancecapital.com. So that's basically the word distance, but with a V. So it's VISTANCE capital.com. Come download our checklist with our call to action, or send us a note on the contact on what services you might be interested in or what you would like to talk about. And we'd be very interested to hear from you.
Excellent. Well, I know that will be very helpful for people. As I said, I'll put all of the links on social and we'll make sure they're included in YouTube if you're catching the replay there. So thank you so much, Daryl. I really appreciate you joining us today. I think you've been able to shed a lot around the thought process and the planning that needs to go into how your business is going to evolve and how you need to have things structured and what you need to ready in order to raise capital, as well as your role as CEO and owner of this business. So I know there's so many great insights that I've gleaned, and I'm sure the listeners have as well. So thank you so much for joining us.
Tracey, thank you for having me. And thank you for putting on this podcast. I know that you have a passion for sharing information and pushing financial literacy. And I think the initiative that you have is vital to the business community. So I applaud you for that as well.
Thank you so much, Daryl. So for all those who are listening or catching the replay, if you want to keep the conversation going, because it can be very lonely being an entrepreneur, you can join us at our weekly meetup at bizmoneyclub.com. And it's a casual meetup, talk about things that are going on in your business. If you can make it 1 week, great. If you can't the next, that's okay. But you continue to be invited and welcome at the meetup. So until next time, take good care and stay financially fit.
Take care.
Thanks.